Alright, so first of all, we determine how likely is it to see on the higher time frames to see expansion, right? And for that, we mainly use the market profiles of the previous weeks. And second of all, if we have taken out any major higher time frame liquidity, meaning monthly, weekly highs or lows. And we also have to keep in mind the seasonality, meaning especially around the second half of December, heading into January, that is usually a low volatility environment for price, meaning as we can see here now, right, January, right, here 24 kicked off, and you can see how, yeah, pretty much all of January was more or less consolidation. We had like one candle with expansion and then again consolidation. And then heading into February, you can see how the volume kicks in again more, and the daily candles, the bodies have or see again a bit more expansion than previously. So now we have here February, right? 24, New Year kicking off. We slowly get back into the groove of things, and we can now expect seasonality-wise heading into Q1, the market to have again more volume, see a bit more expansion profiles, and overall start to move again more clean, right? So the question is now, what is the bias? Where do we think price will head to in the coming days or weeks? So what are we doing now right here? Let's go to the weekly time frame. And what is now the next step? What are you supposed to do here on the weekly time frame to go forward with determining a bias and then a narrative? We mark out liquidity pools. Yeah. So let's do that. So we mark out liquidity pools, right? We can also go to the monthly time frame and see, okay, from the previous year, do we have any liquidity pools which we can aim for? On the monthly time frame, we have the previous yearly high, and we got this low, right? So that's pretty much the current monthly range which we are trading inside, right? We have here, yeah, equal lows, but that low down here is a strong low since we have swept those equal lows. That high up here is also a strong high, right? We have swept this high here into this monthly imbalance. And now we also got here a monthly BPR, right? We have a bullish imbalance overlapping with a bearish imbalance. So there's a monthly BPR, and that's definitely something you want to keep in mind. But that is pretty much, as of now, all we have, all we can identify on the monthly time frame. We don't really have a clear bias, right? Price could go up from here, it could go down from here on the monthly. But since we swept the low and to the range low, this place higher, and we're currently more or less bullish on the weekly. We are a bit more bullish, biased, but we have to keep in mind we just tapped this monthly BPR, so we could also see some pullback from here back to the current monthly low. On the weekly time frame, we have hit now this weekly buy side liquidity pool, right? A weekly swing high, which is the monthly high, the previous one, the December highs. That's the swing high right here. And we could see now price could not close above initially. Then the next candle, we did slightly close above, but we still SFP'd the previous weekly high, right? So we could not really see a convincing bullish closure above the previous high. Inside this monthly BPR, we more or less double trapped this high and then closed back inside this range. And then price again went for the previous weekly low, right? So that's a failed continuation, meaning for this week we expect price to run this low, and that's pretty much what happened, right? We run this low, and now we close back inside this weekly candle range. So what is the price currently telling us here on the weekly time frame regarding the current market profile? We are consolidation, right? We're more or less in a bit of a consolidation, indecision market profile, right? So now the next step would be we determine the weekly key levels, right? Which key levels are crucial to watch out for. And now, if you guys look at this weekly range here, the former sell side, not a buy side, which key levels stand out to you, which are important to be aware of? Inverse IFEG, bullish value gap, bearish one above, small bullish value gap, mitigation block, weekly OB. Right, there's some markout. So we have this weekly OB, right, with the body. We have not tapped the body yet, but we have tapped the wick of that propulsion block, right? And the propulsion block or the order block is also always the wick as well. We mainly want to focus on the bodies, but the wick is also the part of the propulsion block or order block. But the main volume is obviously the candle body. But you know, sometimes, especially if you have like a value gap below, price does not always go for the candle body and also uses the wick sometimes of a propulsion block or order block. In this case, that is a weekly propulsion block. Let's mark that one out, weekly propulsion block, and it is also obviously the high of that bearish value gap, right? So that's an important weekly key level. And you can see here, the monthly BPR, the middle of that is also lining up with that key level. As you can see here, we got a monthly key level and the weekly bearish key level aligning here. And that's where price double swept this high into it, right? We can see here previously on the initial sweep, price did not get up there. But then on the second sweep, price got up here, right? And then we saw price displacing and then back to this low. Now, what bullish weekly key levels do we now have here, right? You guys already mentioned it. We got this inversion value gap, which we used in the last few weeks here in January to expand higher into that weekly weak high below the bullish bearish key levels, right? So we can extend that out as well in case price comes back down here. That is still a weekly bullish key level, right? Now on the buy side, we don't have much to mark out since price was really, you know, slowly grinding higher here in January. We got this minor bullish imbalance here. We can just mark it out, but that's an imbalance which I would really put too much emphasis on, but we can definitely mark it out just for the sake of it. And we got also this one down here, which right now does not have that much relevancy for our narrative, because if we come back down here, you know, we are bearish again, since if we're bullish, we don't want to see price to get back below this inversion value gap, right? We want to see price to hold above ideally, and then, you know, come back higher from here, or already go higher from here now, from this sweep, right? If we are bullish. But if we are, you know, bearish and we come back down here, we can use, you know, this as a target, right? Meaning if price can go higher from this key level, then we expect price to draw into that imbalance and we can use it as a target to short into. All right. Anything else on the weekly time frame which we can mark out here? Discount premium. Since we have inversion levels, we don't really need discount and premium. So I would not really care about the discount premium of this range here, since we have this inversion level, which anyways roughly lines up with the premium and discount, I think. Yeah. All right, then let's get to the daily time frame, right? What can we now see here on the daily time frame? So on the daily time frame, is there anything we can mark out which is for us of importance? Let's create some folders here. Proof drawings. Bullish OB, daily inversion value gap, stuck between bearish bullish OB, mark out the Monday range on. Alright. So first of all, we can see how price on a daily time frame is referring to those weekly key levels we've marked out, right? We can see here beautifully how price used this inversion to value gap to accumulate and then expand into the weekly target. We then went up, double swept this high from this bullish value gap into the weekly propulsion block and the middle of that monthly PPR, right? And then that's where price rejected from, went from external to internal, right? We also could see how price, once we close below this fair value gap here, used then this daily inversion fair value gap, right? We closed below down here, and the next day we swept the previous daily high, and then price sold off into the lows, right? Or did it actually happen before? Yeah, you can see here. So that would have been here a high probability narrative from that day, right? Meaning that entire job here, there was nothing until it closed below. And then we have seen here on the hourly time frame, we swept those equal highs, previous daily high swept, and then price here in London session starting to just place lower, and then New York continuation into this daily internal low, right? So that could have been a move we could have anticipated using the daily time frame to determine that narrative. Got daily key level, sweep, and then the session profiles confirming this New York London reversal, New York continuation. And if we check the time when it happened, there was also a Monday range play, right? Monday range high taken, and then Tuesday expansion lower. All right. So then let's go back to the daily and see where are we trading at right now. You guys also mentioned this OB down here, so we can mark out this daily bullish OB, which we tapped into. Now, do we have here a clear bias on where the next daily candle wants to head towards to? Do you only consider auto blocks valid only when they form into a key level? No, because auto block itself is then also a key level. So auto blocks which form from like a higher time frame key level, like a weekly, for example, daily OB forming a weekly key level, that's obviously much more important for the overall narrative. But for a continuation play, for example, if we just place from a weekly key level, and then we form a daily bullish order block which you can use for a continuation, then it's obviously still an order block which is valid, right? No, but so we can't really have here a clear bias, right? Um, but wouldn't that be counter trade? So basically, in a bullish order flow, price reaches stall close below bullish daily bullish in this case. H1 printer was sold green light. So counter trade. Not sure what you have counter trade, but that would be our short-term narrative, right? We lost this daily bullish imbalance, and that tells us price wants to seek this internal low. Hence, we expect price to use this inversion failure gap to then expand into that low. So daily time frame, right? We can say, okay, price now tapped this daily bullish OB. We have double swapped this internal low. So price still closing inside. So we could still expect a continuation, but at the same time, price just displaced from this daily inversion value gap after we have traded into weekly, monthly bearish key levels. Meaning, can price go up from here? Yes, it can. Can also keep going lower to potentially attack those lows down here. Yes, it can, but right now we still don't have that confirmation really, since price is still not closing below this daily bullish imbalance, meaning more or less price is here in trapped order flow conditions, right? So what we can do here is we can then drop down to the lower time frames. I mean, first of all, that is not now a high probability window, right? Why? Because the daily time frame does not give us a clear target where price wants to head to next. Meaning, what you can only do is you can work with the H4 and H1 and get an idea of where the H4 and H1 wants to trade into, right, in the short term. And then once we have again a clear daily narrative, we can then have again a more defined picture of where the daily time frame wants to head to. Now, if we take a look here at the H4, right, what would be the most logical target for price to aim to on the H4 time frame? Equal highs, right? So on the H4, we took the external, form this bullish BPR. So the most logical draw would be those highs here, right? Then we go to the H1 and we can refine this and say, okay, is there anything we can find here on the H1? I mean, in the H1, we already swapped this internal high, right? And then we saw a continuation from here. But on the H4, those are now weak highs. And since we already delivered from that sweep to the external, we could also again expect price to come up here. We also mark out this bearish imbalance here because that is now crucial to hold if we are bearish. Because if we are bullish or bearish, we don't want to see price to close above, right? This key level. Otherwise, we can expect price to run for this high, and then probably even those highs if we get a daily closure also up here. So on the H4, we now want to see this bullish BPR to hold, right? We don't want to see price to get back below. So that's not the key levels you have to work with, right? We have the low, the high, and we can look for longs from here to up here, and we can look for sells from up here down here, right? As long as we don't either get back below here or back above here. Also, it's a Friday here, right? So let's check the Monday range. Oh no, this shit is bugging, for fuck's sake. We can see price is currently, oh, that's a black line. Let's change the colors of that. So Monday range, let's use red. Yeah, there we go. So we can see currently price, right, the Monday range. You know, once we close with the Monday range on a daily basis, the Monday range low will act as resistance in price. And that's what we can see here quite beautifully, how price is now once, twice, 3 times, 4 times rejecting the Monday range lows. Meaning that here is resistance, right? With those highs here, you can see they are already into the Monday range, so that's something we have to keep in mind. That if price comes back up here, we could reject again. So let's see how is price now reacting to this bullish BPR, right? We have now here Asia session. Now London session is opening. Now ideally we want to see price at the open to run lower here, right? And sweep those lows, form SMT, and then we could look for a reaction higher. Alright, we swept the low. Check euro, pound. You can see here overall they are in consolidation where we don't really have any displacement yet on the majors, and this is why we also rejected the highs here on this candle and the lows, meaning what many people do wrong here they see the sweep, right? Sell side taking into the key level, and then they go to like the M15 or M5 time frame, and then they see, okay, we have now formed a bullish OB here, right? We already tapped the bullish OB. I mean, you can enter longs from this OB here now, right? On this next candle. Put your stop down here. But what is not the dangerous thing here? Price could sweep this high, right? And potentially even that high here. And then come back to the range and remain in the seek and destroy profile, right? And kind of be like something like this. Meaning if you long from this bullish OB, which formed here at London session open, meaning London reversal profile, you have to be really careful that price is not rejecting back and stops you out, meaning you go to the lower time frames and monitor if price can show strength above, you can hold. If price rejects back with displacement, you're better off to close, right? So let's see what price is doing. We go above, right? That's a good sign on the M15. Now let's hope the H1 also can close above, and then we can keep holding that trade, aiming for this first high here. Alright, so we got above. At this point, you would want to go break even, right? Because now if price comes back here, it's more likely to stop you out than to keep going higher. So at this point, you would go break even. And now either price, I mean, would you already have 2R here? Yeah, you can see here you would already gotten some first partials here for 2R. So you would TP something above this high, which lines up with 2R. And then you would leave your last partial for this high, right? And stops at break even. So let's see how this plays out. Yeah, break even. So you can see here, we got the move higher from the bullish BPR, sweep, confirmation, trade, run for about 2.5R, and then the rest would have gone to break even, right? So you have to understand. Stream froze. So back, right? So we have been here, the trade run for 2.5R, right? Above those highs, and then again rejected. And the rest would have gone to break even at this point. So it would have been here a trade now, which we determined using the H4, H1 as our narrative, right? Bullish key level, BPR, sweep, confirmation, invalidation, entry, TP1, and then rest into break even. Now at this point, we can go back to the H1, H4 time frames because there's no reason to watch now the lower time frames here again. So let's go to the H4, or to the H1, bit of better time frame, and see now how price is closing around this H4 BPR, right? If we close back below, we can look for more shorts. trading day is over here, so we can skip to the daily closure. Let's see how the daily time frame will close. So daily time frame still does not give us any feedback. Got the inside bar of the previous daily candle. Still, candle body is still really small, meaning I will still favor here some more upside as long as we don't close below this BPR down here, but still, that's not really a high probability bias. We have now here a sweep on the H4, right? So that's a good sign, but we still have no displacement. Meaning let's take a look at the H1 time frame. On the H1, we do have now this propulsion block here, but it formed around the daily closure. So first of all, we gotta see how is Asia trading, Right. Also no weekly open, right? A small gap. Got the Monday range now forming here. And Monday it's closing. Let's check the Monday daily candle closure. Yeah, Monday closed now right here. We swept the previous low, and the H4 time frame we closed below this BPR. So that is not a bullish sign, meaning right now on the H4 time frame, I mean we have not seen any sweeps of those highs. So we still have a lot of low resistance liquidity above. Do you have any SMT? No. No. Equal lows. Alright. But right now definitely the bias would be okay. We are more likely bearish and we'll head towards the wick EQ. And we got this reclaim bearish imbalance to look for continuation from. So let's check the timing. Wait, it's Monday end of London close, so let's skip forward to Tuesday London session. Consolidation. So we do have now a sweep here, right? I mean, overall in the consolidation here, we took out the previous daily low, but we're now rejecting from this reclaimed bearish value gap, and we have swept this high here, right? So I would be watching now here, heading into. We also got news here, right? Durable goods at 8:30. But definitely nothing really which just stands out like obvious, but bias would be more likely bearish from that sweep here because we swept into the key level, but we got news coming out in a bit. So let's see what price is doing. Going up again to the highs, into the key level. Going up again and then going swept not those highs. So we got an H1 sweep, and now we could form here a potential bearish OB. But overall, that is like a ranging profile, meaning, yeah, not really too sexy. Fair value gap still holds. Swept now this internal low. Yeah, overall, that's a seek and destroy profile. Let's see the daily candle closure of that day. Yeah, daily is still in this infinite range. We got this wick here, which we respecting. But we still have no displacement or higher time frames, meaning that is still here, chopping around. So now we went back up higher to this high again, this which we marked out as our internal weak high. We did have here in the H1 a Monday range play, but the way it played out was literally quite ugly. And then we had here Asia expansion again, so nothing to catch here on that one. H1 proportion block which we formed. But we got those weak highs here, so it's really the most high probability proportion block. But we can mark this out since we displaced now from this bearish value gap after a sweep, right? So if we see the lower time frames, price displacing into that and then dropping lower, we can short something like this. And then short here. Let's also check euro and pound, what they are doing. Yeah, looking. Could be here potential AMD, right? We have the range, Monday range, we have the low. But we also have those lows still down here. So that's the previous weekly range. So overall, you can see not really the greatest higher time frame conditions to look for trades. Here with the SMT with pound here, right? Sweep. So euro would definitely be here the better asset to look for longs than pound because we got a sweep. But let's see what the XY is doing. Yeah, nothing close. So probably the day is over here. Let's see how we trade into the next day with Asia. So we have Asia highs, those highs here. Let's see if we can trade above those Asia highs and then drop lower from this proportion block. Damn, that's some ugly SPA right here. Sweep. Alright. Now let's watch how we trade above those highs. So and on the M5, we swept this high. New York reversal profit potentially. Did we have news here? Let's see. Yeah, we had news. So news at 8:30 PCE. Got above. Bearish BPR. Let's check euro at this point. Euro swept the London lows. The pound do. Yeah, pound is definitely the uglier asset. Like with 8:30 here, so we had this pre-news manipulation, right? out of news, we traded above those highs into proportion block, the wick here. Did we tap it at all? No, we slightly did not. Let's check the H4 time frame. Yeah, we have an H4 imbalance here, right? So we did trade into this H4 bearish imbalance, which is also a BPR. So we do have here a key level, definitely. But as you can see, would I enter here pre-news with my stops above this BPR? Probably not, right? Something like this, because there's possibility news come out here and we wick above and then drop. So I probably would have been waiting here for the news to come out and then enter like the lower time frames, like the 1 minute, just to avoid, in case news get a small wick up higher and run this high again and then drop like a double sweep. I would wait for this candle to close here and then enter like this, stops above, and then target the London lows here. And below we have the Monday lows as well. So we have the Monday range play supporting this, right? Overall, the weekly profile is more or less seek and destroy, right? But we are trading at the range highs, so that would be a valid setup. Would it be an A plus setup? No, but it would be definitely a setup which you can take, So let's see how this plays out. Here you would go break even, right? Because we swapped this low. So you can either TP down here, or you go break even and just hold until here, right? Yeah, there we go. To create a push block, it doesn't need to confirm the OB with first closing below. The OB in this case is that candle here, right? This upper one. That's the OB. That's the repulsion block. Doesn't it concern you that we swapped lots of liquidity already and had such a bullish M5 reaction? No, that's why, you need to determine the higher time frame draw, right? In this case, right, what was the thought process behind this trade, right? Let's break it down. We determined before that we have on the hourly time frame, we have that key level and the BPR below, right? We went lower, swept the Monday low into the lower end of this BPR. Also, you can see the daily wick, right? The middle of this daily wick. This placed higher above the Monday range high, and then we swept liquidity from the Monday range high, and those H4 equal highs which we marked out in the previous week, and then we formed our repulsion block from this key level, right? H value gap, and then we have seen here pre-news price sweeping the London highs, Asia highs, and those out of session overnight highs into this H4 inefficiency, lining up the Monday range high, and then we have seen from that key level an M5 confirmation, which again gives us the confirmation that price is bearish. We did not enter here pre-news because there was a possibility to get another spike up higher to run this, this initial sweep for double sweep. And then, as mentioned, I would have entered here on this imbalance after we have seen the initial news dust settling, leaving by this bearish imbalance, confirming price is bearish, stops then above this high in case we come back to take this flat open here, like a wick, then drop. But overall, that should be not a validation. And then the target would be the low here, and those lows down here, which line up with the Monday range low, and you can even then leave some partials for this low down here, right? But at this point here, I would have closed most of my trade already below those lows here, right? But you can definitely leave like, a small partial for those lows down here. Let's see if we got down here. No, we don't. So if you would have left a small partial, then this would have gone into break even. All right. And you can see here where's price reversing from. Again, middle of their daily wick, right? So let's take a look at the daily candle closure again. And see how we close that day. Our daily candle closed quite decent, meaning right now we would expect, okay, this should be the next target for the daily expansion, right? Since we just placed up here, we still got on the H4 this value gap here. But since we, came back lower, let's check for SMT here as well at those lows. Did euro sweep that high? Nope. Did pound sweep the high? No. Let's check UJ if that swept the low. Yeah, UJ did sweep the low here. So we do have SMT with UJ at that low. So we now got on the H1 this bullish OB, right? There should be another bullish key level to watch out for. And that's where we can frame then longs from the lower time frames if we get a retracement into down here. And then the target would be first of all this high, and then if we can push above, right, invert this value gap, we can aim for this high here. Again, daily time frame not really too clear, but let's see how we open with the next daily candle. All right, now price engineering here, weak low, right? So we mark out the weak low. All right. Asia session. Let's wait for London session to open and then see if we can frame longs from the OB. Let's hope Asia does not run from here already until London open. That will be annoying. So London open is here. Let's check what is price doing. Yes, no, no. I mean, we now have formed this propulsion block here, right? But I don't really like the setup. Like, that would be a setup I would skip. With SMT here. Pound also is not confirmed yet, this OB, so there's potential SMT, right? But we have not confirmed the OB on Euro and Pound as well. So DXY could still reverse from here and run those lows again into the OB and then go higher, right? So there's the option we can go higher now from the OB here, or there's the option we can come down one more time and then can look for longs, So that would be a setup I would skip. Either it comes down here again, or we now confirm this SMT properly on Euro and Pound, and then frame longs. Yeah, does not look like. You see, that's a great example of why you always want to use Euro, Pound, DXY to confirm each other, because DXY gave you here this propulsion block, but Euro, Pound did not confirm that propulsion block on you can see here, that's the OB. We did not even close below, so no confirmation on that asset. Pound now closed below, so Pound is the weaker asset. Meaning I would look for Pound shorts here, if anything. but DXY does not look too great either right now. So right here, I will probably, okay, we swap the week low here again. We also have news at 10 a.m. All right, sweep. Aha, now we got here sweep, proper sweep. That looks already better now. That looks better. Let's see if we can get an entry. So the next candle, I mean, that's lunch now here, right? It's London lunch opening here. That's annoying. I would take this here with half risk, right? I would long the next candle, open, high, low, close, and then I would add if we can hold now above here heading into a New York session. Otherwise, I would think that would be a seek and destroy profile, and we, come back lower. But since we have the sweep here now with the S&T, the lows, I would say, okay, let me put here half an R risk on the setup. If you can push now above those highs and don't reject, like if we do this, we come back up and then immediately drop again, then I will close for a partial loss. But if we can push above here, then I will hold the trade. So I would be now in the trade here, and now that's where I would go to the lower time frames, right? And I would watch how is price reacting now to this high. Can we hold above? Still holding here. Check. So right here, I will probably close for partial loss, because if price would have been able to just run from here, I would hold. But since price swept not as high, right, that's the external high of that range, and we see price displacing from here, I would think, okay, there's the chance now much more higher that price comes back down here, stops me out, and then I can look for longs again if it sets up. I don't want to hold this trade now from the sweep through lunch, so I would close this trade here for like a small loss or more like break even, because I don't like the reaction here. Let's check euro and pound. Yeah, euro also displacing from the lows again, from those ones. So no, that's not a trade I would hold for lunch. Let's see how we trade now. Yeah, you see, that's exactly what I told you, what you don't want to see, right? Price rejecting the external. And you can see here, I avoided the loss by simply being aware of that. Close the trade here manually at, more or less break even, and then price would have stopped me out. So loss avoided, right? In this case, now we come back, swap this low again, this internal weak low, right? We have engineered this internal low, this one, and we swapped it now. So now we got high resistance liquidity up here, obviously. Let's see now. We do know we have 10 a.m. news, so probably until then I will be careful with new trades, but we could run up higher from here now. Let's check what the euro's doing. Double swap the high. Pound as well. Value gap. Monday range high, right? We want to see price to hold above here. It's a Friday as well. So we swapped this low here. Again, I probably would have turtle soup bought this low again with half risk, simply because now we have, potential seek and destroy profile. It's a Friday, but the trade here is quite decent. Since we have the sweep here at New York session open, then form the BPR, fair value gap. So I would again, with half risk, long this as a re-entry from this initial idea, since the idea is still valid. Stops down here. And then see how we trade into news. We have news now coming up right here. The target would be the same, those highs. So I would go break even ahead of news now. Right, break even here because now there's no point for price to come back. Yeah, then I would have gotten stop break even on the news. You can see here this imbalance on the H4 still would have held this one, which we used here for shorts, still could not get above. So you see that's overall a really hard market to navigate the lower time frames, right? You really have to be, going break even once you sweep liquidity. You have to, if you're long, for example, here, you have to go exit early if price is rejecting this first external high here. I mean, how much would this gone for? Yeah, 1.9, so I would not even get my first partial at 2R. So that would have been a break-even trade on this one. Stopped on the news, no news continuation. And back inside the Monday range. So at this point, I would close the charts for the week and then wait for the next weekly candle to open. In this entry, PDRAB at the 0.5 level of potential S&D range. Of what range of time frame? I mean, we have this range here, right? But I'm entering here based off a lower time frame sweep from the range high of the Monday range, right? With the Monday range high, closure above, so we can look for continuation from here. That's our key level. Sweep, confirmation, run up higher, break even level with the bearish key level here, which is left not reclaimed, and then break even. You always aim for 2R. Now, sometimes I also go for 1.7, 1.8 if it's really obvious, and I don't think a continuation is likely. For example, a counter trend trade. Can you put it 3 minute 140 again? Yeah, I can try. Do you also partial it 2R depend the context? Yeah, always depends on the context. Alright, let's see how the weekly candle is closed here. Let's delete all of those ugly ass drawings. So weekly time frame still looks like shit, right? Value gap holds inside bar, right? So we now definitely know, okay, the market is in a ranging profile as you already determined on the lower time frames before, so we can just mark out the previous weekly range highs and lows and then wait until those ones getting swept. So daily time frame, yeah. Seek and destroy profile. So let's see how the daily is developing. Alright, so now previous low got swept. Let's check now. Maybe we can get longs to the highs again. Uh, Tuesday. So Monday lows taken. Daily opening gap. And Asia is filling the gap again. Come back lower. Ideally, I would like to see a double sweep here or SMT at that initial sweep. And then look for potential longs. Or we go straight away to that low. Do we have SMT now on Euro XY? So we do have SMT here. But since we got this high still here, pound. If SMT at that high potentially. So now we need to wait for like an hourly change in order flow on DXY, and then we can look for longs. Nope. Looks like we will go to the low. Oh, that was it FOMC day? No, Powell was not speaking at 10 a.m. Or was he on that day? I'm not sure. Probably just a normal speech. So now we have swept the lows of that range. So the bias would be okay. We have now this low down here, and those equal lows. That's where we can expect price to drop into, but for that we don't want to see price to retrace now from here from the sweep. We want to see price to consolidate below here, and then we can look for run lower. Let's check how we are we trading. Wednesday, Thursday, alright. So let's hope we don't expand in Asia. London session next day or New York session. T. So we do have SMT here. I mean, we could see an expansion from this sweep on DXY already. I think that happened here at London session open. Bearish OB. Let's see if we can run lower from here. I would be probably in, let's check the M15 on Euro. Probably would be in longs on Euro at this point. From this propulsion block. Yeah, propulsion block. I would be long from here. So DXY. Let's see if this can run. Holy shit. Got liquidity. Ended up as liquidity. Damn. Yeah, I would have re-entered here on this sweep. So I would have taken a loss initially. Right here. And then sweep of the London high. Did we have news on that day? Oh, yeah, okay, of course, we had Powell speaking again on that day. So I would have taken a loss here on that one. The initial trade. What has the Euro been doing? initial loss here, and then check the M5. Yeah, M5 time frame could have re-entered on the M15 already. Let's check the M15 closure. Yeah, on Euro we confirmed the OB, so on Euro I would have entered then on this candle here again. Right? Something like this. This candle open, stops at the low. The narrative will still be the same. Or the bias entry, and then TP the highs for about 2 hours. Check pound. What has pound been doing? Yeah, pound looks horrible. I wouldn't touch this. So let's add here as well this entry. And this is why we have not confirmed the OB yet entirely, like those two up close candles. But since we have fair value gap forming here, and on Euro we've confirmed the OB, I probably would have re-entered the trade here. Probably we had some news coming out here because that looks like we had some, I don't know, some fuckery coming up with that move. But would have taken a loss here probably. And then would have re-entered and same targets. So TP1 would be that line here, and then TP2 would be the slowdown here. Yeah. GG. I think we'd also in the SMT at the highs here. Yeah, that would have been then the trade. Probably if I would have knew that Powell would have been speaking on that day here. I mean, I did not check the news before I entered the trade, but of course, if I trade live, I would have checked the economic calendar from that day. And then if I knew, okay, Powell would be speaking here, I either would take this trade only with half risk because I know, okay, the market could be coming back for those pre-London or this London high, Asia high, or I will not trade at all and say, okay, I will wait for Powell's speech and then look for, around the speech for an entry, which would be that one then here. But with, the back testing, it's always kind of hard to anticipate or be aware of everything going on, what are bonds doing, what is euro, pound, gold doing, and so on. Those are all things which I look at when I'm trading live, and that's kind of hard to obviously replicate one-to-one in the live backtesting session. They were news 8:15. All right. I committed to doing less trade management and get clapped in these conditions. Well, in these conditions, did more harm with cutting trades early. Yeah, it's because that's why you always have to. That's the thing with trading systems. You have to know how have you adapt just to trading to what market profile. But if you have a trending market profile, you can be way more aggressive with your trade management. But if you have a trending market, ranging market profile, you have to be way more aggressive with going break even and taking partials around 2R, What is that TP1 you marked? That was the low of the imbalance, right? And this OB here. What the fuck is it putting the short position down here? Anyways. Alright, so we have hit now this higher time frame target, which we're aiming for. And let's take a look again at the So we're now trading back at the weekly IFVG, right? And that's now crucial to hold if you're bullish. We determined earlier in the weekly analysis, if we close below here, we can aim for this down here, those lows, right? If we now can consolidate and then turn bullish again, we can look for more longs. Tracement, right, from the weekly and monthly key levels, and now we're taking a bullish key level again. So now again, that's where we have low probability conditions to look for trades. Why? Because we've seen an expansion before. We have taken out this low. We still got this low down here, but we've taken out a higher time frame objective. Price is trading at a bullish key level, meaning price can do multiple things here. It can, continue being bullish here. It can consolidate here. It can go bearish here again. So we don't have any information of what price wants to do here, meaning we just know, okay, as long as we hold above, we can look for longs if we see a change in order flow to the lower time frames. But if we don't, we are bearish and we can look for, either this, right? We have the bullish case, something like that. Look for longs. We close below, we can look for shorts. That would be the game plan pretty much going forward. So let's see, we expect some consolidation, right? We can take out this low again, but then we do expect some form of consolidation. And that's exactly what we have, right? So simply by knowing those simple things, you could have avoided getting chopped up trying to trade here inside this range. All right, new week, Monday. Let's see what we're doing. Now we see some form of displacement with the hourly time frame, right? We swap this internal low, fair value gap. Let's check for SMT. No SMT. So we don't really trust this yet here, but we can look. We got those relative equal highs up here, which could be a target if we now can hold this bullish value gap. That's not crucial to hold. We have New York session London close actually, so probably the day is over here. But let's watch the M5, also bullish OB. Again, we don't want to see now here a large retracement. We want to see maybe this, to sweep here and then go higher. But we don't want to see price to come back all the way down here. That would not be a bullish sign. So let's check what London close session ended here already, so the day is over. But let's see if you can hold here heading into the next day. Doesn't look good. Doesn't look good. Nope. That's not good. It's not good. do hold this fair value gaps on the H1, but we're more or less chopping around right now. Do you have any news coming up this week? PPI. So London is now able to displace into lunch. Let's see how we can hold into New York session. Candle bodies are still respecting the middle of this fair value gap here and this bullish OB. So let's see. Got this high here. See what lunch is doing. Nah, that's not what I want to see. If I look for continuation, so that's a bearish signature and price. And there we go. Yeah, price is still in a ranging profile, so no need to watch the lower time frames. We will just wait until we get something clear on the higher time frames. All right, daily time frame, we now got some displacement. So bullish key level, bearish key level. I mean, we could be here still in trapped order flow between those two opposing PD areas, but since we have seen displacement from a bullish key level, we would definitely look for continuation, right, on lower time frames if we get a retracement here. You would trust the reversal from the inverse to evaluate more after we saw H1 displacement. If we saw SMT between majors and explore certain SMT yet, so I wouldn't trust it much. If there's no stop run on all assets, then you want to see at least some form of SMT. Alright, so bullish imbalance here, right above the key level on the H4. So that's what we want to watch out for retracement into. And then we can look for longs from there. So Asia does not run away, that would be not good. London, and now we come down. You can see now the daily key level, we're consolidating below the bullish, bearish one. Yeah, new weekly candle now. Let's check the weekly candle closure. I mean, weekly candle from the bearish value gap, but we can see now prices displacing from this weekly inversion value gap. So still, we are still bullish biased overall since we are holding this inversion key level, meaning we don't yet look to short down here. We respect this. We swept the daily lows, so we want to look for continuation this week. And we got this daily bullish imbalance, which you want to use to frame expansion from, right? We also got no BPR here. That's a BPR. Inversion for value gap, bullish value gap. So we want to see price to sweep the previous daily low, and then we want to look for an expansion. So something like this. We then reclaim this daily imbalance, and then we can look for continuation. Right, so first long, second long. And then we can target those daily equal highs here. All right, that is not a plan for the week. Let's check what news do we have this week. Building permits and FOMC on Wednesday. All right, so Wednesday FOMC, right? Meaning potentially seeking destroy until FOMC unless we see price now early in the week running lower and then showing clear signs of displacement. We at least want to see price running this low, ideally also this value gap, but we don't have to. But this low at least, right? The previous daily low. That would be an open low high close, yes. All right, let's see if we can run the low. SMT. Yeah, so we could have here SMT again this low. Let's check the H4 time frame. We closed above the daily open here on this candle, so M15. Yeah. On the M15 we confirmed the SMT right here on this candle. So I mean, the day's over here pretty much, London close, so I would not look to enter any trades here, but I would definitely expect now potentially, expansion from here higher. Let's see how the daily candle will close. Yeah. So I think Monday could be the low here since we closed above this daily, or will probably close above this daily value gap. So we can look the next day for continuation from this range already. So week low here. I want to see that one getting swept ideally. Again SMT here. Yeah, okay, again SMT here, those twice. Again SMT. Yeah, so that will be a euro long here, euro short here from the Asia sweep. SMT again. SMT. Let's see London Open. So on euro, I would look for London continuation profile here, meaning I would enter here at London session open, and then short this imbalance here, for example, stop above the Asia high. Probably I've taken this trade as well back then. London continuation, 2R. So let's see if we have any liquidity pools to aim for. Yes, we do. We got those lows here, right? So that's what I've been aiming for. Those lows. First partial at 2R, and then second TP, those lows. Let's see. So on the XY, I mean, it's added trade here because we've added all the trades on the XY so far for completion. So, I mean, on the XY, the trade would now look like shit because we have not seen that same retracement, but this is just use the same entry time. So right here, then validation would be the low. I mean, on euro, obviously setup would be much more senseful, I mean, making more sense. But just to add is like that. Let's see if Euro already would have hit my TP. Yeah, so Euro, I would have hit my TP here from this Asia sweep, right? Displacement, meaning London continuation profile. We have SMT here, we have SMT here, so back-to-back SMT. And then so TP hit as well, right here. Here it's now 1.4R, but obviously on Euro it would be, 2, 3R. But yeah, you see the logic how we define that before the week opened. We said, okay, when it price coming lower, we did that with the SMT. If we close above this daily fair value gap, we could look for continuation from here. We did that, had the stop run on Euro, so the SMT on DXY, confirmation into London session, London continuation, and that's our pre-FOMC entry, right? And now we would wait. We can leave some partial in anticipation of FOMC being bullish for Euro, for DXY, and therefore bearish for Euro. And then we could leave, a runner for that high here. What stops would be at this point on Euro at break even, obviously. But let's see now how we trade into FOMC. See what Euro would have done. Yeah, Euro would have gone into break even as well. But on Euro, I probably would have been out fully on the sweep anyways. Right? That would have been my final TP down here. 3R in total, almost 3R for Euro in this trade. And then I would have just waited for post FOMC to see what's going to be the bias. So let's check the daily candle again. So the daily candle still has not closed back below, but that's obviously not the most ideal closure. We rejected from the OB, swept those highs. But since we know FOMC oftentimes is reversing the next day, this could just be another manipulation to take out now the Monday lows into this lower BPR and then to go higher from here again. We will see. New weekly open here. No, daily open actually, not weekly open yet. Let's watch the H1. That's not where we want to see a continuation from if you're bullish, right? If you don't see a continuation from here, probably we are bearish and we go for those lows. Sweep, tap this lower key level. Now I want to see if we can sustain this bullishness. There we go. And yeah. And then we hit the targets. Here, great example of what I mentioned. FOMC oftentimes reverse in the next 2 days. And yeah. Targets hit then as well. Beautiful delivery and price. And now again, here you would just call the week, right? Targets hit. We had longs here. You could have looked for longs again here on that move. Let's see if there was any setup on Euro. Again, SMT at the key level, right? SMT at the key level. That's where you always want to watch for SMT at the key level. SMT. Sweep, close below, entry on this candle, right here, validation above. Would have been a continuation setup. Target. Market maker sell model, consolidation, reaccumulation, reversal, low risk sell confirmation, final distribution, Asia expansion. So could have been an entry, right? And then here, London continuation profile again. But since we hit the target already in Asia here, I would not enter here again, but just for your understanding, Asia 3 displacement, London continuation, just that we already hit the target here, right? This first target. And then we obviously, I think, have also the higher time frame targets, the respective ones from DXY. Yeah, those ones down here, right? This would be, leave some partials for down here as well. But since DXY, I think, already took out those highs. Yeah, so SMT at those lows with DXY then again. What if price doesn't run the low and keeps pushing? We just look at the price telling us what's called. This code sweeping that level. Talk about a weekly open. I mean, you look for SMT, right? If you don't get a stop on DXY. Just how I did it right now. Look for SMT and then you can frame an entry based on the SMT. But yeah, my mental battery, I feel, is coming to an end, so that will be it for today's case study. Really exhausting to do that live and talk and so on. But I hope you guys could, yeah, find some value in how to put all of those things together to find high probability trades. I mean, even now here in this price example we did, those, I mean, how much was that? Like 5 weeks or so. Wait, we started here. Like 5 weeks of price action where we had, you can see here, consolidation, more or less. And we still got like 5, 6 trades in that time window. So you can see you don't need a lot of trades, like 1 or 2 trades a week. That's it. And you can really have high consistency if you just, focus on trades around daily key levels after hourly manipulations using the Monday range for your narrative building, daily key levels. And yeah.